fun.
Wall Street Week with Louis Rukeyser is made possible by the Corporation for Public Broadcasting and by the financial support of viewers like you. By the Travelers, over 40 million Americans benefit from our insurance investment services and managed health care. The Travelers. And by FGIC, a GE Capital company helping to provide peace of mind. FGIC AAA Municipal Bond Insurance, tomorrow's security. And by Prudential Securities, the knowledge and resources you need to help make intelligent investments. Rock solid, market wise. Produced Friday, March 20. Our panelists are Howard P. Colhoun, John Dessauer, and Lewis Holland. Tonight's special guest is Stephen Milanovich, Principal, Morgan Stanley and Company.
Good evening, I'm Louis Rukeyser. This is Wall Street Week. Welcome back. Well, this was the week when spring began, and the American garden duly produced more than its share of both crocuses and weeds. On the political scene, one more flower was plucked, as Paul Tsongas yanked himself out of the row of Democratic presidential contenders. With the soil under him already loosened by some cruel diggers from Illinois and Michigan, Tsongas uprooted himself, leaving that much more room for Bill Clinton to gather rosebuds. Tsongas finally learned how grievously he had violated the rules of the presidential election game by actually trying to think and even come up with genuine ideas in the midst of a primary season. By even having the temerity to suggest that it was kind of stupid for people who were worried about jobs to beat up on employers and investors, Tsongas showed so little understanding of modern American political gardening that it's astounding his plucky plant managed to survive as long as it did. As both Bill Clinton and George Bush routinely demonstrate, any would-be bloomer who fails to reinvent himself with each day's Gallup polls might as well consign himself immediately to the political rutabaga patch. And speaking of foul vegetables with large yellow roots, did you follow what happened in Congress this week? Why, it turns out that no fewer than 355 present and former members of Congress were following the bouncing ball in their check-writing habits. As one wag put it, we have moved from the Keating 5 to the kiting 355. The great fear in Congress, of course, is that all these mushrooming evidences of irresponsible arrogance in Washington might lead some folks even to vote against their beloved longtime incumbent. If you can imagine anything as un-American as that, thereby making our nation's capital in 1992 the city where the rubber meets the road. Meanwhile, the nation's economic garden was clearly beginning, however thinly and grudgingly, to bloom. Nobody wanted to get too excited about it because of last year's short-lived season, when a promising set of late spring buds did take the country technically out of recession, but failed conspicuously to produce the sustained and vigorous growth that would convince the average gardener of this. Nonetheless, the tulips were clearly showing their colors. Industrial production, factory use, housing starts, and real worker earnings all popped up nicely, adding to the feeling that while we're still several acres short of anything resembling a boom, the economy will be looking a bit prettier as the year unfolds. All that better news cheered almost all groups of observers except two distinctly different groups. Those who had hoped to make political hay out of economic crop failures, and the young men with a hoe, but never a ho-ho-ho, in the bond market, whose ugly flowers thrive on bad economic news. Well, you can't please everybody, even when your heart is full of springtime hues. We tonight will look at a color that has been painfully true to its name, Big Blue, giant IBM, which has been making its stockholders blue for years, in the company of the #1 independent expert on that industry. But first, let's turn from the posies to the weeds and see what really did happen this past week in Wall Street. The Dow Jones Industrial Average was subjected to the usual quarterly pressures of a so-called triple witching week, in which all sorts of options and futures are expiring, and stocks are whipped about in the computer-driven process. But this week, the artificial pressures turned out to be to the upside, and the Dow gained 40 points to 3276.39, within 14 points of a new record. And for the second week in a row, all the broader indexes, except the Amex, followed the Dow into plus territory. So the week ended with gloom in the futures market about whether the rally had any further to go. None of this churning influenced our elves, who remained unmoved. 3 technicians bullish, 2 bearish, and the largest group, 5 chief elves, predicting that the Dow 6 months from today will be within 100 points of where it is right now. The bond market tried to rally after 2 weeks of sharp declines, but ended virtually unchanged after a late week scare, as it became more and more evident that the economy, despite the bond ghouls' fondest hopes, is actually beginning to improve. The same dreadful tidings helped send gold to its lowest weekly close in nearly 6 years, around $338 an ounce. And if in spring a young man's fancy is supposed to rightly turn to thoughts of love, a situation that is always more productive if a young woman's fancy is on something resembling the same wavelength, spare a tear for the British royal family, which is breaking up at a rate reminiscent of the Titanic. Well, if this kind of scandalous behavior keeps up, next thing you know, one of them is going to be taking a job. Pete Colquhoun, when you were last with us in January, you correctly forecast better economic news. Are you concerned now about the upward jiggle in interest rates?
Interest rates are just jiggling and not really going up. I think the interest rate picture won't change, and it has a big effect on the stock market until the Federal Reserve tightens money, and my guess will be that Alan Greenspan will not do that, the head of the Federal Reserve, until after the election.
Would you be a buyer of bonds at present rates?
I think I'm neutral about the bond market. I think that the gain you saw in the bond market in the 80s of about 16% a year total return, you will not see in the next few years, and I think you'll basically earn your coupon in the next 12 months.
You'd focus on stocks, and particularly you told us last time on smaller stocks.
Yes.
Right?
The 2 classes of stocks I favor are the small companies, bought through a no-load mutual fund would be my route, and the other is I like international stocks at this juncture, and I'd also use a no-load fund to get participation.
International stocks in general, or in some particular area?
No, international stocks in general.
Why, the dollar will weaken or strengthen?
I think the economies, the stock markets in the international domestic markets will do well, and the dollar may go against you a bit this year, but on balance you'll do well.
You think we will leave the rest of the world out of recession?
Yes.
And you'll get more bang for the buck by putting it in things that are not in bucks?
That's right.
Okay. All right, Lou Holland, what's your feeling about how things are going?
Well, I think the stock market is still in a bull market. I think that stocks are still historically high priced. I think the risks short term basically are continued rises in interest rates. And I have some concerns as really how good first quarter corporate earnings will be.
So do you think the market is topping out for the moment?
Well, I think we're probably going to stay in a trading range somewhere between 3,200 and 3,300, probably for the next month or so.
All over the country, people are having CD sticker shock, trying to figure out what to do with their money. What do you suggest?
Well, I think that probably CDs, we might look back on it, might be relatively attractive. I guess probably they should seek out returns maybe in the 7 to 10 year Treasury. I think those areas are pretty attractive.
Yielding something over 7% at this point.
That's correct.
John Dessau, Pete's invaded your territory by talking about the international situation. What do you make of these other world markets, and what do you think of what's going on right here in the U.S.?
Well, I think there is more excitement in the months just ahead overseas than there is in the United States. And that's simply because we have led the world, I think, already into a recovery, and there are falling interest rates to come in Europe and falling interest rates to come in Japan, and more excitement elsewhere, particularly in a country you just put your finger on, and that's the UK. Have not only the Royal House...
I never put a finger on any of them.
Have not only the scandal there, but you have elections coming up on April 9th, and that stock market's off, and the pound is off, and so you have some very nice British companies traded right here in the United States that are available and I think quite interesting.
Give us a couple.
I'd be happy to. Cable and Wireless, which is a big international telecommunications stock, has come way down. New York Stock Exchange, CWP. Glaxo Holdings, which is a drug company of some international prestige that has a new migraine drug that is expected to earn them $10 billion a year. That's GLX on the New York Stock Exchange. And one little more controversial that we like, which is in the waste management business, called Atwoods, symbol A.
Pip, pip, but no guarantees on either side of the Atlantic. This is the point in the program where we normally pause for a round of viewer questions. We'll soon be back to normal, or at least what passes for normal around here. But tonight, that time goes to your local public television station, which is providing your absolute last chance in this campaign to make a badly needed pledge. I hope you will, and tell them Uncle Lou sent you. And don't forget that next week we'll have our third annual induction into the Wall Street Week with Louis Rukeyser Hall of Fame. So if you have an all-time favorite you would like to nominate, we would love to hear from you before the judges make their final decisions for 1992. The address is the same for questions or nominations, or just to say hello. It's Wall Street Week, Owings Mills, Maryland, 21117. That's Wall Street Week, Owings Mills, Maryland, 21117. Now, before we meet tonight's special guest, who has been repeatedly recognized as Wall Street's leading analyst of IBM, let's take a look at why the company that so long dominated American business and finance as Big Blue has lately been singing the big blues. Despite its woes, IBM remains dominant in some computer markets, notably the big so-called mainframes, where its 55% share is nearly 7 times as great as that of runner-up Fujitsu. At its peak in 1985, the IBM share was only 10 points higher. And IBM still does well in some other areas, too. It's the leader in the mid-size so-called mini-computers by nearly 2 to 1 over runner-up Digital Equipment, or DEC. And IBM's 20% share is only 2 points below its 1985 peak. And despite all the clones, IBM is still the #1 seller of personal computers, though its 17% share is less than half the 38% of the market it held in 1984. But IBM lags in some other industry areas, such as workstations, where it is a poor 5th in sales, the network installations known as PC LAN OS, an area dominated by Novell, and word processing, where those companies marketing programs that work on IBM machines are way ahead of Big Blue itself in selling software. Moreover, IBM is still non-existent in such other areas as supercomputers, mini supercomputers, desktop operating systems, high-end databases, and accounting spreadsheets. The bottom line is that IBM, which had a 37% share of computer industry revenues in 1975, today is down to 21%. In the past decade alone, IBM stock has traded as low as 55 5/8 in 1982, as high as 175 7/8 in 1987, and today at 86 1/8 is down to less than half its high of 5 years ago, a period in which the overall market, as measured by the S&P 500, has risen by nearly a quarter. Has this once predominant growth stock, the very model of American industrial excellence, now permanently had its day? Or will the Big Blue chip finally start to act like one again? For some input on that and other high-tech questions, let's go over now and meet tonight's special guest, Stephen Milanovich. Steve, welcome. We're very pleased you could come.
Hello, Lou.
Please have a seat.
Thank you.
Stephen Milanovich brought his keyboard to Morgan Stanley this year after a year at Salomon Brothers and 8 years at First Boston. At all 3 firms, he has distinguished himself as Wall Street's leading analyst of computer mainframe and mini-computer firms. Not a bad performance for a Wisconsinite who is still just 31 years old. Steve, why has IBM continued to be such a disappointment to its stockholders?
Well, I think there's 2 issues, Lou. First is size. I remember in the early 80s, analysts were looking for, at the current growth rate, IBM to be the size of Sweden. And as a $70 billion company, it's obviously difficult to grow in double digits. But the more important issue is technology. The history of the industry is that companies that have been successful tend not to be successful in the future because their technology changes. In IBM's case, they were really tied to mainframes, whose heyday was the 60s and the 70s. So mainframe growth has slowed, and IBM has been slow to get into higher growth markets like workstations and software, and found themselves with too much overhead.
Is the change coming about because smaller computers can do what mainframes used to have to do?
It really is, Lou. The microprocessor is perhaps the most important thing going on in the computer industry, and it's really caused this trend called downsizing, where users are taking applications off large computers and putting them on more economical small computers. IBM gets 50 to 60% of its revenue and profits from mainframes or large computers, so it's inherently in a very difficult position.
Can IBM turn itself back into a growth company?
I don't think so. I think IBM is appropriately looked at as perhaps a cyclical company today.
A company whose fortunes are tied to the overall economy.
Exactly. My view is that long-term IBM is unfortunately in secular decline, although near-term, with perhaps a turn in the economy as well as a new mainframe cycle, there may be an opportunity to make money in IBM this year.
What would you do with the stock today?
If I held the stock today, I'd hold it. I wouldn't be aggressively buying it because the company is in long-term decline. But if the stock is going to work, it should begin to work in the next 12 months with a new product cycle and the economy maybe getting back on its feet. So I'd hold and wait for something good to happen to me in the near term.
IBM was probably the most overpraised company of the past generation. Can't a company which allegedly had so much excellence reinvent itself in some way, readjust to the situation you've talked about?
Well, management is trying to reinvent itself in a sense. It's gone through a number of restructuring charges to get down its overhead, but now it's looking at creating independent business units to create more entrepreneurial, aggressive units. I think that will have some positive impact, but I think until IBM goes further and actually breaks up into totally separate units that can create their own image in the marketplace, slow growth is still ahead.
Some people who agree with your very cautious assessment of its long-term prospects hold IBM now for income. What do you think of that?
Well, IBM's dividend has been the source of a lot of controversy. I think the dividend is safe, but I do think it's dangerous to buy technology stock for yield because the price swings can easily offset your income, so I think that's a tricky thing to do.
Are there any of the companies you follow you would be a more aggressive buyer of?
There are a few hardware names I like, Lou. In the mainframe sector, Amdahl has a new product cycle, and I think that's going to be a stock currently at 18, moving to 25 to 30. Hewlett-Packard is a name that's had a good run here, but the company's really remaking itself in RISC computers and as well in printers. And Cray Research is the leader in supercomputers and also has a new product cycle. Those are three names I think should do well in the next 12 months.
How about IBM's PC competitors, such as Apple?
Well, the PC business, unfortunately, is also being commoditized very quickly. Apple's in a somewhat better position because of their excellent graphical user interface and their move to low price points, which has reaccelerated the revenue growth. But names like Compaq look like they're going to be in a slow growth mode for some time.
Unisys, which has been beaten down, has popped a little bit lately. What do you think of that company?
Well, I think it's probably not worth looking at Unisys longer term. What happens at companies such as Unisys is that essentially a CPA comes in to run the company, they cut costs, you get a pop in the stock when you get a brief bit of earnings, but long-term market share losses make Unisys not so attractive.
Let me bring up an exciting computer program manned by our panelists, starting with Pete Colhoun.
Two of the smaller computer companies that had fantastic starts were Compaq Computer that you mentioned and Stratus. Stratus has gone on and continued to grow. Compaq fell on its sword. What was the major differences between these two companies that one should be aware of in looking at other companies to pick those that have sustained growth and those that are likely to have a short-term good life?
I think looking at those two companies, Pete, one has to look at non-technology factors, particularly marketing strategy. In the case of Compaq, they rested on their laurels. They let AST and Dell do to them what they did to IBM, which is come in with lower-cost computers. Stratus, on the other hand, is what I would call a gorilla. It's the big fish in a small pond, in their case, mission-critical applications, and they really stayed focused, watched the competition, and continued to grow. So I think it's a case of marketing versus technology.
Steve, digital equipment, I've seen a number of buy reports on the stock recently, and is there any substance to those reports at this point?
Well, I think it's early to play digital. DEC was the leading mini-computer company, and the mini-computer is under attack from workstations. IBM has gained share there, and DEC is trying to remake itself with this new Alpha RISC chip and rebuild its mini-computer business. But my fear is that DEC is losing influence in the industry. Users just don't really want proprietary mini-computers. That's the 1980s game. And long-term, perhaps DEC can get their act together, but again, the history is that companies that have been winners tend to go out losers. So I tend to stay away from DEC for now.
Steve, the American auto companies are complaining bitterly about how difficult it is to sell things in Japan. How do the American computer companies do in Japan?
The American companies do reasonably well. Obviously, it's difficult for them to get government business, but IBM has been either the second or third largest mainframe company in Japan for some time. I think the real threat to the American companies is Japanese companies coming here. They pretty much own the semiconductor business, and my concern is if they own the bricks of the house, eventually they're going to own the house itself.
As you know, protectionism has been in better odor this year in the political campaign by American campaigns all around the country. What would happen if we restricted trade to our computer sales abroad?
Well, the main threat to these computer companies isn't so much foreign competition as it would be with the auto companies. It's really the changing technology. And, for example, Mr. Akers of IBM was in Tokyo a while ago saying that if...
Chairman John Akers.
Chairman John Akers.
For those who don't follow it every day as you do.
Absolutely. That if the U.S. government put tariffs on flat panel displays, which are the screens in these notebook computers, that IBM would have to move their manufacturing to Japan. So to some degree, the computer companies are held hostage to that, and it makes us have to keep our market open to those components because our companies depend so much on them.
The thing that put computers most in the news in the past month was the virus attack that was supposed to sweep through the world's computers, the Michelangelo virus. In fact, it didn't. But is there any way we're going to beat these viruses?
Well, the virus turned out not to be too big a deal, so it didn't do too much harm. One of the big issues in the industry is making computers more secure, which is a software issue. So I think there are a lot of good minds working on that problem. But it really shows how the software is driving the industry today. It's not the hardware anymore, it's the software. That's what people focus on. That's where the growth is. I think that's where investors can make more money.
Steve, we have less than a minute left. You've already suggested that IBM lagged because it didn't keep up with the changes within the industry. Look ahead 10 years. What changes do you see coming? What are some of the most significant?
Well, unfortunately, hardware is going to continue to be commoditized. So I think the hardware portion of the business won't be so attractive. But there's always going to be interesting...
You mean one guy's computer is as good as the next guy's computer?
Pretty much. It's going to be tough to make a lot of money there. But the innovation will really occur in ease of use, which is software. A company like Microsoft is well positioned for that. Networking is very important, connecting together all these computers that we have. Two companies that do well there are Novell and Cisco. Interactive computing will be very important. For example, the television and the computer will merge.
There we have to stop. We hope to punch you up soon again, though. Thanks very much, Steve Milanovich. Thanks, our panelists. Hope you'll be back with us again next week. Then my guest will be a young Chicagoan who manages more than $1.5 billion of other people's money. He's John Rogers, a leading practitioner of so-called value investing, which seeks to determine in a hot air world what businesses are really worth. I know he'll be worth tuning in for. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser has been made possible by the praise and firmness.
Tighten up, leader. Come on. I have to be alpha all the time. Because with being dogs, they need to have a social order. And I'm the leader of the pack. You did good today, honey. You good puppy.
Ray Summers at Large, Lapine, Oregon.
You know, it's been kind of a tough winter for dog sledders. All the way around, a lot of races canceled because of a lack of snow. But as they say in baseball, just wait till next year.
Oh, we were wondering if she has any neighbors.
They would be a little upset by some of that, too.
A little loud.
The snow would probably insulate a lot of that sound, wouldn't it?
Maybe. There's a lot of dog noise.